Hey everyone, it's Will here with Flow Trade Effects. I'm bringing you guys a new video. This is going to be a breakdown of my two recent trades from yesterday. Um, First is going to be the USDCHF, and then I also took a Euro USD trade. First, let's get into the USDCHF and get into why I took this trade, what happened, and why I actually lost this trade. Oh yeah, here are the results of these two trades, by the way. The USDCHF resulted in a loss, and then I took a couple trades later in the day that resulted in two wins, and they only took a couple hours. I'll get into that trade in just a minute, but like I said, let's begin here with the USDCHF. So here we have these two brackets in red, which pretty much designates the last couple of days of price action that I was using to determine my trade here. The first bracket is signifying a resistance area where if I were to zoom out a couple days or a little bit backwards, you'll see that the price was actually coming on like a little bit of a downtrend and created this resistance on the way up. As it broke through this previous support here, instead of bouncing off of it, it continued to come up, and then it went actually to retrace and test this trade and then come back down. As I seen that, I marked both of those areas, and then as the day proceeded, the market actually came up and got close to retesting up to that area, not fully, and then closed somewhere around the bottom bracket here, which was the support line which I drew. So at this point, we have three taps to the bottom side. We have about 1.5 taps towards the upside at this point, and then we have the market resting somewhere around this support here. And this is the day previous before I actually entered my trade here. So I'm just breaking down the market structure of what was happening here before I actually entered my trade. So as we see here, the market kind of rests around the support area, but respects it more or less, and then actually comes back up and gets within about a pip or two, more or less taps that resistance area again, giving us about 2.5, 3 taps towards the upside, 4 taps towards the downside. Now, next time we come towards the upside, if the price actually holds here, then I'm looking to get back in this and trail it back towards the downside because it seems as if price has been in a nice range. So I use that, and what do you know, the next bar actually brought price up towards the extent of this range towards the upside, which was the resistance, and closes just about a pip above it, and then the next candle opens and closes outside of this area, and that was my entry here. So as the market comes down here and enter or closes here, we get a few hours where I'm actually in profit. The market comes up here, retests my stop area, gets within a pip of it, literally doesn't stop me out though. And then it comes down here. My stop or my take profit is actually indicated by the bottom bracket of this green box, and my stop loss is indicated by the top bracket of the red box here. Now, this was a 2-to-1 ratio I was looking for. The market, as you could tell, came within almost a pip or so of my take profit before actually coming back up here and stopping me out completely out of this position. Now, I got into this trade with this understanding that this was a range market and that this top bar or this top extent of this can actually potentially be more of a range area instead of a precise price point where the market is turning at. So I knew that if I gave this market too much space, I could be potentially in reversal range and I could miss that by having an improperly placed stop loss. So I figured it'd be best to keep my stop loss tight. And if it was going to move and respect this area, it should do it off of this area regardless. So I kept a tight stop. I didn't move my stop. And even though I seen the price, come close to here, I was not actually present in this market, or else I might have closed it. I don't know. Um, at any rate, the price came back up here, stopped me out of this position, and then literally just a couple hours after that, the market came back down here to exceed my take profit area and rest around that support zone we had here previously. And yeah, obviously, as you could tell, that happens in the market sometimes, and you can't be really too worried about it. You could obviously keep in hindsight that, oh shoot, I wish I had a tighter or a wider stop because then I would have been able to get profit out of this position. But if I had a wider stop, it would have skewed my take profit, and I would have definitely had to aim for a larger profit zone. Granted, I could have maybe stretched a bit more on my stop loss given The upper bracket here does indicate some more slightly, like it does indicate that there would be a little bit more room up here. I still kept a slightly more tight stop on it. And as you can tell, I got stopped out of this position. Right side of it, I wasn't waiting in this position for multiple days or hours without any profit or take profit or stop loss being hit. So that was the bright side of using this and keeping a tight stop. I was able to execute this trade, and within the session, I was able to know if I was right or wrong. And then I was able to find other opportunities, as you could tell here. And that is a good segue into this next trade, which was the Euro USD, and we were able to find this trade. After we took that trade and we lost it, I still didn't lose any confidence. Obviously, the session was still, there was still plenty of time left in the session, so I decided to look for other opportunities. That brought me to the Euro USD, in which I seen it was actually doing the opposite of what the other market was doing. So instead of it ranging, it was actually dropping clearly from one area to the next area. When I first seen this trade, the market was on an uptrend, and then I seen that it created this swing high. Instead of holding at this area right here, which was kind of a retest of the previous break, the market actually went stagnant there for multiple hours and then broke away from it. I took this trade based on the break away from this area. Again, I didn't notice this trade as early as the other trade, given the way that I was in the other position. But by the time that market was out, I was able to see this around this time right here. And then the market had gave me a clear level to put a stop loss at. So I did that here, in which there was plenty of wicks, very small candles breaking away from this little congested area. So I placed a stop loss just about a pip above there. And then I got my target, which was the most recent swing low here. And as you could tell, oh, sorry about that, between here and here, at this point, there's no other level between here and here other than this one down here. So that's why it was a clear, easy target to look for. Okay, the market will go from this area to here unobstructed if the market is able to break through this level right here. And that's pretty much the basis of that trade. It was a breakout retest continuation in which the market broke through this little level, retested it from the bottom side, as you can see here with multiple small wicks. It was very sensitive. This was a very small trade, and you got to be very sensitive to be able to see it. But I was able to notice that, and I don't actually mind these trades because my risk reward was still there. And within 2 hours, I was able to get in and out of this trade with very little test to my stop loss at all. It was pretty much straight drop towards the downside, and you could tell that there was actually the potential to have an extended um, profit target towards the downside, perhaps towards the ADR of the day. But that's a whole nother topic. I spoke about that, I think, in my previous video about how to use the ADR. But if I didn't, then perhaps I can make another video about that if you guys are interested. If not, then that's just another little tool that you guys can research on the side. The ADR, I like to use it to see where the projection of the day might end up being. But in this case, my take profit was hit well before the ADR, and I was out of this position completely before all of that even happened. So that pretty much does it for these two trades. Um, the USD definitely was a nice trade. It looked like it was a nice trade, at least I should say, and it looked like it offered a nice risk reward ratio with the potential to go a little bit further, but it simply didn't work out, and that's just the way it happens. That's why having good risk management in place is essential as far as remaining and being consistent. And then as you could tell, the Euro USD worked out in my favor, and it was a slightly smaller amount of pips, but it definitely still was able to offer me a nice risk reward and a very clean, clear setup. Um, Both of these were taken within the same session and were able to be exited within the same session, which is clearly beneficial. When it comes down to finding your trades moving forward, just a little tip from this breakdown, I would say cherry pick the best opportunities of the day, but don't be afraid to take your opportunities as long as you have wise risk management in place. Um, and if you do see yourself wanting to take maybe more trades, then minimize your risk even further to be able to account for the additional um, positions that you might want to also take. So just keep those things in mind. Those are definitely things that I took note from this because I was able to see that, although consistency is something that I like to like express, it happens over time. It's not like every trade is going to work out exactly how you want, but you want to be consistent in your approach every time. So I hope that was helpful, and I hope you guys like this video. If you do, give me a thumbs up. If you have any questions or comments, definitely shoot them below. If you guys want to get any more updates and stay on top of these, definitely subscribe to get more um, updates that I put out and more videos that I put out. You could definitely follow me on TradingView if you guys want to see my charts and different analyzations that I make put up on there. I'm Flow Trade Collective. And if you guys are interested in joining my Telegram group, it's completely free. Definitely shoot me a comment or let me know about that, and I can get you added to my Telegram group as well. That's pretty much going to be it for this breakdown video. Definitely appreciate you guys. Stay healthy, stay positive, stay profitable, and I will see you guys on the next video. Peace.